Back at it again. Got to be thankful for another blessed day. That's first and foremost. And then we got to be thankful for the opportunities that the market is providing. Before we get started, please read the disclaimer in the description and keep in mind this is for entertainment and educational purposes only. Once again, y'all see I got that headband on. That means I came to play, but I ain't playing. And this time was a lot better for me today. You know, I knew I was going to rebound tonight, put myself in the overtrading situation. But let's go ahead and dive into the market. So as you can see, we had a gap up with QQQ and a gap up with SPY. Why CPI numbers came in good, actually lower than anticipated. It came in at 3.5 versus a 3.8 year over year for the previous month, which is really good. That means prices are getting lower, which more money can be spent by, or more money will be willing to be spent by consumers, and it lowers the odds of Fed increasing interest rates. So if Fed increases interest rates, that's to combat inflation. That's going to tighten the money in the economy, and that's going to be less money flowing around. If they lower interest rates, that means it's going to be looser on the money. It's going to be more money flowing around. Now, the whole watered down effect of that is that it starts with the Fed and the banks borrow money from the Fed. So if the interest rates are lower for the banks, banks are going to be more willing to borrow more money from them, which means they'll be more willing to lend out more money to small business owners, consumers, and so on. So it's just that trickle down effect that it's going to be more money into the economy. And if it's tightened, then you know it's the reverse. People got to hold on to that money because they don't know what the economy may or what might happen as the economy continues to push forward for the rest of the year. So that's that with the CPI. Like I said, volume is still low, but like I said with the SPY, look at that. Regardless, the market is starting to absorb this Iran war move. Like it's not really causing as much of an impact as it did initially, which is a good thing, especially since we're hovering right under these highs. Now, like I've been saying, all we need is that perfect catalyst with the volume to send us through those highs. We can sustain that move, and rising tide lifts all boats. You're just going to see stocks flying out the wazoo, just taking off. So that's what we want to see. QQQ is kind of towards the middle of its, but it's a nice pendant or a nice flag pattern if you put lines on it. Nice breakout for that possible push. But the stock that I was playing today was AMD. Why AMD had this beautiful, beautiful gap up. We were opening right here, and my thought process was going to get a nice push to these highs and possibly more with a sustained move. The overall market's gapping up. AMD is towards the high of its consolidations. We're right here at all-time highs. All we need is the volume to support it. As you can see, we did not get that volume to support it. And if we take a look intraday, nothing but choppiness. Nothing but choppiness. I did jump in after, so the initial candle sold off, and we had this candle reverse. Really nice pushback to the highs. So on this candle right here, as we were pushing closer to the highs, we broke this previous high by just a little bit. So I threw an entry there, expecting it to continue to run. As you can see, it reversed. I went ahead and exited my position, took my loss on it. Really nice lower day breakdown right there, and took my loss on it. It had a really nice reversal right here that provided really big opportunities, but I was no longer paying attention to that. So what I then did is I switched my point of view to QQQ. Why? Because QQQ provided a really nice opportunity with that lower day breakdown. I caught it here. Caught this breakdown here. We had this flush down and recovered, but I knew if we can get this flush to at least half of this candle with the sustained volume necessary, we can get a nice breakdown. So I caught in here into this flush here for the nice volume sell-off. End up actually finishing green on the day. However, QQQ, that really was just a scalp move just to clean up the move. That was not the trade of the day. The trade of the day was JPM. Banks released earnings this morning and they had amazing earnings. However, they still gapped down. So that was the tricky part of it. Bank of America, look at how it finished on the day, but it gapped down. JP Morgan, look at how it finished on the day, but it gapped down. I can't remember who else did earnings today, but that doesn't matter. JP Morgan was by far the best move of the day. Look at that. Look at that beauty. So let's go back to the daily chart so we can understand why. Let's go back to the daily chart. Let's pull this back a little bit. First, we're trending up. That's nice. We got into a consolidation. We're right here by our year highs. Nice consolidation. But the only thing is we have this gap down. But you do got to keep in mind if the overall market's gapping up and we have blowout earnings win on JP Morgan. JP Morgan produced the highest profit for its quarter in U.S. bank history. So these are the kind of things you got to keep in mind. That the gap down, we're not sure exactly what might be the gap down. It might be some institutions taking some money into pre-market volume because they see that they actually have the volume to dump some of their shares off into it. But it had this beautiful, beautiful reversal back up to highs. Now, like I said, that's not a typical thing I play, but I can understand the move. Look at that bad boy go. Now, this would have been the perfect chance to enter right here. Beautiful tightening price action coming into this 338 level, higher lows, topping. We got consistent volume just going, going. Boom, nice push. Beautiful, beautiful, beautiful. Let's take a look at the actual options, though. The options was very, very nice. We're going to look at, since it expired, let's look at 340. If we're opening up here at the 28, and D has 340 is nice. Okay, so let's go ahead and scroll back here. And boom, look at that. We're opening from a low of 27 cents into that high. $5, guys. $5. Catching these stocks that are gapping down with these blowout earnings and reversal. Now, regardless if it gapped down or not, this is the kind of potential of the move. If this stock would have gapped up and been aligned with my criteria for trading, I would have hit this move with no hesitation. Boom, and took at least 2-3x off of it. But since it gapped down and went against my typical alignment for my criteria, I didn't trade it. However, if I could have traded it, boom, we're buying right here on a break. Boom, we're buying right there on that break. We're buying at probably, let's just say 70 cents. And before we see our first red candle, we're already up to $3. We're already seeing 3x off before we even see our first red candle. And if you can make it through that, because it does not break the low of this candle, really nice tightening price action, really nice break, continued volume, we get this push all the way up to here. Now this would definitely be your exit candle, but let's take a look at that. That's all the way up to a price of $5.83. So from 70 cents to $5.83. Big potential here on these stocks. Great moves. Amazing returns. Unfortunately, I couldn't take advantage of it because, like I said, it didn't necessarily fit my criteria, but that was really nice to see. And that's a really good start to earnings as well. So that's a good thing. Now, the next stock that I wanted to talk about was NVIDIA. NVIDIA's rally at the end, well, from mid to end of the day was beautiful. Look at this. From late morning, we're getting a bounce from 204 all the way to 212. Now, I seen it here in this consolidation, midday consolidation for the break, but I don't like the choppiness when it comes to the break. I like mine smooth, kind of how we see in JPM. Put me in the money immediately so I can be nice and comfortable to allow a full day move. I don't want no choppiness when I'm jumping in initially. I need to have enough room to be comfortable in, so in case it does pull back, I'm still taking gains or I'm break even. I want my moves to prove that I'm right immediately. But if we go back on the video and look at that move, we're going to look at the 210. Well, 211 was the breakup, but we're going to look at 210. We're going from a low of 34 cents just to get to higher day. We're seeing 3-4x. So that's a nice, beautiful move right there. Like I said, I was looking at it midday, but I knew I wasn't going to trade it. I just wanted to take a look at it and see how it was moving. But real quick video here today, guys. JP Morgan, that was beautiful. So just to let you know, as we continue on in the future, we're looking for those stocks that are trending, holding up very well, really nice consolidation, volume supported, catalyst, which was earnings, aligned with the overall market gapping up, and you get these kind of moves. 70 cents to $5. 70. Let's pull the calculator out so you can understand what I'm saying. Let's pull the calculator out. 5 divided by 70. Boom. Now, of course, we do our $1,000. Subtract your 1,000. Boom, you're making $6,000 within the first 30 minutes of market action. Beautiful move. Very possible as long as it's aligned with the criteria of trading. Unfortunately, the gap down is what removed it from my list. But there will be a stock that comes again, just like Meta was, or just like Hood was, or just like Apple was, that's going to give me that gap up with the volume, the room to run, the catalyst, and align with the overall market. And I'm going to be there to smack it. And I'm going to make sure I let you guys know.